So yesterday, Lemonade announced earnings, and well, the stock did not take the news very lightly because investors sold out of that thing. Lemonade stock from yesterday has been down 18+%. And if we look from this beginning of this year, Lemonade stock is actually down, what is this? 42%. And if we look just since Lemonade has IPO'd, the stock is actually down 13%. So the stock has been getting battered a lot recently after it had its mountain high run up where it was up over 150+%. And now it's taken all those losses and come all the way back down to earth. And so we're going to talk about what exactly did they say in the earnings call that made investors run away from the stock, and what I'm going to be doing with my little share of Lemonade moving into the future. And then we're just going to break down a few other things that they said during the earnings call. So if you're interested in any of that stuff, stick around and we'll talk more about Lemonade as we move into the video. All right? Whoosh. What's going on, people? It's your boy Kalechi back with another video. If this is your first time around these parts, hit that subscribe button. If you enjoy anything that we talk about on this video, hit that like button. Turn that thing, say it with me now, blue. But anyway, like I said at the beginning of this video, we're going to be talking about Lemonade. We're going to be focused on their earnings call and some of the things that they announced during the earnings call that made some investors a little bit spooked and saw a lot of people flee out of the stock. First, we're going to begin with the financial numbers that they announced during the earnings call. So we'll start off with the in-force premiums. The numbers look good. Like, the numbers look good. If we compare it to the numbers that they had from last quarter, everything is up quarter over quarter. From last quarter, they had $213 million in in-force premium. By the way, if you don't know what in-force premium is, by the way, whenever you're reading any earnings call or any earnings report, you don't know what something is, all you need to do is just scroll a little bit and they will define exactly what those things are. And in-force premium for Lemonade is defined as the aggregate annualized premium for customers. In other words, all the premium that they get from customers, all the amount of money that customers pay to Lemonade is what in-force premium is. But anyway, let's get back to the numbers. So Lemonade announced an in-force premium growth to $252 million, and that is a year-over-year growth of 89% from this same time last year. And so it's really good numbers. And if we look quarter over quarter, that is 213 million to 252 million, which means Lemonade is growing quite nicely. Now, if we look at per customer, which is a big deal to see that Lemonade is getting more money per customer. In other words, their customers trust them so much that they're buying more insurance products with them. So they grew that from $213 last quarter to $229, which is also a good sign. Now, the one negative number that a lot of people are pointing to when it comes to Lemonade and why some investors are running away from the stock is they're saying, yo, this growth number is slowing down. Like, they're not adding that many customers. But the thing is, if you look at Lemonade, they added 1 million customers, or they had 1 million customers last quarter. In December of 2020, they had 1 million customers. But however, they've grown that from 1 million customers to about 1,096,000 customers. In other words, they added over 90,000 customers in the last quarter. Now, to me, that's good news, but to a lot of people, that doesn't sound as good, which the ironic thing is a lot of people are looking at the percentage of the growth. However, the thing you have to pay attention to is not just the percentage, it's the actual number of customers. And during the last quarter where they had over 1 million customers, they only added 60,000 customers. But now they've added almost 90, or actually over 90,000 customers, which is great to see. If you're a Lemonade investor, you want to see this. By the way, if I look down, I'm looking at my notes so I make sure that I don't miss anything going through this. So all of those numbers are great, even the ones that some people are looking at and saying, it's not that good. Now, the one number that a lot of people are looking at and a lot of people are freaking out about is the gross loss ratio. Now, the question is like, what exactly is gross loss ratio? Gross loss ratio is the amount that an insurance company has to pay back out from the premiums it has earned. Now, for Lemonade, that number spiked majorly. But the thing is, this was all due to the Texas freeze. If you take out the issues that they had with the Texas freeze, where everybody was filing claims and everything, and which we'll talk a whole lot more about. It's one of the reasons that I'm actually like still bullish on Lemonade, even with all the negativity around it. They actually would be around the 72% range. Now, if you compare it to industry standard, the gross loss ratio in the insurance industry is about 40 to 60%. So Lemonade still has a ways to go as far as that is concerned. They still have a ways to go. But then again, if we look at another good insurance company, Geico's gross loss ratio is about 74% for the last year. So that's not bad. So Lemonade is not doing horrible. It's not doing great as far as that number is concerned. It can be doing a whole lot better to bring that number down. But the only way that it's going to be able to bring that number down is for the other number that's very impressive, the gross earned premium, to continue to grow. As long as the gross earned premium continues to get bigger and bigger and bigger, where they only have so much of a liability that they have to pay out so often, then their gross loss ratio will go down. So these two numbers are anti each other. They're anti, which if gross earned premiums keeps growing very, very nicely, gross loss ratio will drop down substantially. So that's good news. The other thing that Lemonade announced in their earnings call, which they've actually announced it previous to this, was Lemonade Car. However, even though that's a big news and it's something that I've been waiting for Lemonade to do, it is not going to show up on their forecast for this year because they're not going to launch it until later this year. So they said, while we have not yet announced a launch date, we note that our full year 2021 in-force premium guidance currently contemplates no material contribution from car insurance. In other words, they're not factoring in their car insurance. As a matter of fact, last year they launched term life insurance, but that hasn't really hit the books yet. They haven't seen any kind of substantial amount of money that is affecting their in-force premium or is showing any kind of major growth in their in-force premium. So they're not even factoring their term life insurance into the numbers yet, and they launched that last year. Now, if you don't know, Lemonade has a bunch of different parts of its business. It has pet insurance, it's got life insurance now, it has apartment insurance, and now it's adding on car insurance. So that's the different parts and different ways that Lemonade makes most of its money. Now, going into some more things, and let's talk more about a new ratio or a new KPI, key performance index, that Lemonade is going to be sharing with us. And this is one of the reasons that I like Lemonade. This is actually one of the key reasons that I'm a big Lemonade stan, apart from the fact that, I'm trying to use the product. So, but one of the reasons I like Lemonade is this key ratio that they just started sharing with us, which is the annual dollar retention. And they said that the annual dollar retention is to provide more granularity around retention rates and trends, and to support the analysis of our ability to retain customers and sell additional products to them over time. So, and their ADR is at 81%. So it's climbing. More and more people are choosing to stay with Lemonade. Once they join Lemonade, 81% of the time, their customers are not choosing to leave. They're choosing to stay with Lemonade. That is good, which means that Lemonade is building trust. Lemonade is building great customer support, and more people who join Lemonade want to remain with Lemonade. And that shows during this Uri freeze, during the Texas freeze, and their loss ratio, which we talked about earlier, jumped all the way up to 121%. But then when you see more about it, you see that they received about a year's worth of claims in their first few days of the ice storm. And it provided an extreme stress test for both their operations and financial model, which means that Lemonade has finally gone through the storm. One of the questions that a lot of people always has is, will this company survive if it has to go through something major? Will this company, especially insurance companies, would they be able to survive if there's a major storm, if there's a major hurricane, if there's any kind of major thing where a lot of people are going to be filing claims? Will this company be okay? And Lemonade, after going through this Texas freeze, showed that it has the adequate support to ensure that it survived. But not even that. Even more important, it says that our people in technology rose to the occasion, and the majority of claims were fully resolved within a week of the storm's onset. How many insurance companies do you know actually tries to settle whatever kind of dispute you have with them, or whatever claim that you support or you submit to them, in less than a week? How many? I remember I got in a car accident and it took like 5 months for my insurance company to send me the money that I needed to be able to repair my car. Like, what? But on Lemonade, it does it very quickly. I know people who had roof damage because of a hailstorm that we had, and they're still waiting on the insurance company to pay out their claims. This is one of the reasons why I love Lemonade. This is one of the reasons why I am bullish on Lemonade, as you can tell from my voice. But even more important, check this out. It doesn't just go off of my hype. Net Promoter Score, which is generally an accepted measure of customer satisfaction, was near 70 for URI-related claims, in line with our typical non-cat experience. We believe this is without parallel in our industry. So everybody goes, well, okay, you put that number out there just to be impressive, which is one thing you have to always watch out for when it comes to reading financial results, when it comes to reading letters to shareholders. They're always going to phrase the information in a way to make themselves look good. So the thing you always have to do is look out and be like, okay, they put this number out here, but what does it actually compare to in the industry? So I did a little bit of research. If you go on Google and you search out what is a net promoter, that was the first thing I wanted to see. Net Promoter Score is a widely used market research metric that typically takes the form of a single survey question asking respondents to rate the likelihood that they would recommend a company. So it's usually like whenever you have some kind of work with a company, like let's say you call like for example, I called Discover Bank the other day. They send you this email and say, hey, can you tell us how we did on that customer service? Tell us how we performed. And then usually during that survey that you're answering, they ask you another question like, will you be willing to recommend our service to a friend or to family members as well? So you get those emails all the time. So that's what the Net Promoter Score is calculating. And if we look at the insurance industry, the average is 34%. 34% is their Net Promoter Score. In other words, people usually are like, nah, I'm not about to like tell other people to come join this insurance company. We only stay on this insurance company because it's the best one possible right now. But you can see like people actually love Lemonade. It has a 70% Net Promoter Score. In other words, people are telling other people like, yo, have you heard of Lemonade? You should probably join Lemonade because Lemonade is actually a pretty cool company. It's very easy to file a claim. It's very easy to get paid for that. Like you're seeing those things form, which is so good for Lemonade. Another reason that I like the company. As you can tell, this is the main reason. Now, is that a competitive edge? Is that a competitive advantage? I don't know that yet. And so that's the next part of the video that we have to get to. So we've been kind of talking about the stock a little bit and how it's fallen from where it was $160 a share, or actually $183 a share, all the way down. It has fallen over 67%, all the way down to $60 a share. Now, do I think it is warranted that it needed to come back to earth? Yes. This stock flew before I knew what was happening. When I first started researching the stock, it actually IPO'd close to my birthday and it was around $70 a share. I was looking into it, but even at that point, I didn't even know that much about investing. I was looking into it. I actually told my boy Tolu about this stock and he went and he bought when it was about $40, $50 after doing his research. And of course, it exploded on him. He took his profits because he's a smart investor. And since then, the thing has been coming right back to earth. The thing has fallen majorly in the last few weeks. But it's not just Lemonade. If we look at all the tech stocks recently, we've seen like major growth stocks have been getting hammered in the stock market. Do I think it's necessary that Lemonade is getting this hit? Yes. Do I think that Lemonade was overvalued? Yes. So am I going to sell out of Lemonade? No. Because I still like the company. If there's one thing that you've heard from everything that I went through in this earnings report, this quarter earnings report, is the fact that there's still a lot of good things that this company is actually doing. It is growing in the right direction. However, it is not growing as fast as other investors thought it would be growing, where everybody was just piling into it. I'm here for the long haul. I'm here for the long term. I'm going to keep monitoring this company. Now, the main thing that I'm focused on when it comes to Lemonade as a stock is I'm comparing it to industry standards. If we look at the top insurance companies in the United States in the same area that Lemonade focuses on, which is property and casualty insurance, we look at companies like State Farm, Berkshire Hathaway. It's hard to factor in Berkshire Hathaway because they just own Geico in there. Allstate, Progressive, all the names that you know on a daily basis. The main thing that I'm going to be looking at is, okay, what do those companies trade at? What price to sales ratio do they currently trade at? So if we look at one like Allstate trades at a price to sales ratio of 0.94. 0.94. If we go back and we look at a company like Progressive, another name that we see adverts for all the time, what did they trade for? They trade for a price to sales ratio of 1.44, 1.45 if we round up. So when we compare that to Lemonade trades at a price to sales ratio right now of 25 times. Now, of course, it used to be around 70 times price to sales ratio, which is bonkers. Now it's come back to earth a little bit. Now, my estimation, I would like that to be around 10. Not 25 times because it still has a lot of growth. However, we all know this, just like with Amazon and all these other companies, growth doesn't come cheap, especially when they're acquiring customers as quickly as Lemonade is acquiring customers and more people are buying more insurance. However, it is finally coming back to earth. This is, well, now it looks like, okay, I'm going to put a little bit more money into Lemonade as I'm seeing it fall back to earth as it's now around this $60 mark where it's under this $3 billion market cap. It was about $5 to $8 billion a couple of weeks ago. That is extremely expensive. Now it's coming back to earth. I think Lemonade right now should be valued around $2 to $3 billion. So it's still a little bit overvalued, but it should be around that $2 to $3 billion mark. So what am I going to be doing? Dollar cost averaging. Because first of all, I don't have that much money to just put into one stock, but I would just be dollar cost averaging into this company because I believe that in the long run, just like I said with Roblox, in the long run, this company should be one that is bigger. Either it gets acquired in the future or it grows into its earnings. So always do your own research. By the way, I'm not a financial advisor. This is all just for entertainment purposes and about one guy who's super excited about a company. But anyway, I'm going to catch y'all up. But next time, let me know. What do you think about Lemonade? Do you think that I'm out of my mind for buying a company that has a price to sales ratio of 25 times? Let me know. Put it down in the comments. Leave your takes on Lemonade. If you even knew Lemonade existed as a company and I wasn't just talking about water, put it all down in the comments. But I'm going to catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all. And I'm out. Peace. Whoosh.